Hey guys, welcome back to Gen Z Invest. So today I'll be showing you guys how I open and close some of my positions, my option positions. So starting with AMD, I recently bought this share by selling a cash secure put and it was exercised. So as you can see just now, I got 100 shares. Now that I gotten my 100 shares, I'll sell my covered calls on them. First thing I'll look for is the dates, obviously, the expiration dates. For me, I like to do monthlies because I'm too lazy to manage the option positions weekly. Now I'll be looking at the strike price at the call area. So for me, I want a 2% premium that I'm getting and also some capital gains. So I'm going for the 130 strike price because this strike gives me the most enticing deal, which is a good premium above my range of 2% and also some room for capital gains. Actually, the IV for this stock is actually pretty high, so the premiums that we'll be getting is higher than usual. So it was actually a pretty hard decision for me to choose the strike price that I actually wanted. As you can see over here, I was actually taking a while to decide which strike I actually wanted because at the same time I was using another phone to calculate the percentage premium that I would be getting. I also changed the expiration date as I wanted to see 1 week difference can change the premium by how much and also compare the difference between the premium. So I even went down to the 14-day expiration to check the premiums out, but it doesn't look so enticing. So I went back to the 21-day, which looks the best. As the 28-day, I needed to wait a whole entire week to just capture $40 of extra premium. So I don't think it was worth to me at that point. So right now I'll be choosing my premium price that I want. So obviously I'll put in the mid first and then I'll try submit the order. As you can see over here, the order's not filled, so I have to go back and I have to lower the premium price. So once again, it's not filled, so I have to go back down and change the price. So I'll get back to you guys when it's filled. Finally, the order was filled, but the premium I got was only $3. So let's go to the next trade then. My next stock is Nike. It's also one of the well-known companies, and I got this stock also by selling a cash secured put, but for this stock I got over 200 shares, which I will only sell a covered call on 100 because I believe that Nike will recover. Now we'll find a expiry date for my options for Nike. So most likely I'll look for a 35 one because Nike volatility is low, so the premiums are not really that great. And the other thing is the strike price that I will be choosing is also gonna be high, which is 80, because my break-even cost is about 76. But then over here for the premium, I'm gonna try for a ask price, which is 20, and let's see does that go through or not. And no, it doesn't. So since it doesn't, we're gonna change the thing lower again. Okay, I'm too lazy to put a different price. I'm just gonna put at the ask price. Boom, we have completed both two trades today. 3 more trades and we are done for the day. Next up, I'm gonna sell calls on TDW, which is a oil shipping company. I'm kind of bullish on oil right now because Trump he's a drill baby, guys. But of course for this stock there's only monthly options, so I don't really have a choice. So I'm gonna put the 35 days one. And for the strike, I'm gonna pick the 70 strike. For this stock, even though I got 300 shares, I will only be selling 2 call options, which only will be using 200 shares as collateral. I'll first start off with the mid bid and try my luck as always. Unfortunately, I didn't get it, so I have to change the premium price again to closer to the bid price. I tried 30, but also didn't get anything out of it, so I had to change it one last time. So I just placed it at the bid price and gotten the order. So we are done with that trade, I guess. Next up, we'll be selling calls on PBF, which I don't even have shares of these, but I'm testing out some strategies that I'll share in the future. So this is just like a testing phase. But I'll also be selling calls on this. And I also was thinking, should I close the position where as I was currently open in, or should I just open a position without closing this, as it's gonna expire today anyways. I also needed to check the share price, as I kind of forgot what the share price was. So right now I'm just heading over to the share price app. This is installed in the iOS software already. So I went to check out the share price, and that's it. So since I already know the share price, I'm not ready to open my position. But first we have to check the expiration date. Obviously this is only a monthly option, so that's only the 35 option over here, and there's also the 2 months out options, 63 days. I'm not really interested in that, so I'll open a call at 35. Actually no, I don't really want a 35 because my synthetic position is at 35, so I want to open one at 36. So as you can see over here, 36. Try submitting the order at 0.28. No luck, so I had to just submit the order at 0.2, and boom, we got the order. One more trade to go and we are done for the day. Finally, we're going to do the last trade of the day. So the stock of the last trade of the day is going to be Occidental Petroleum. Yay! So this was the share I was talking about. And I don't really have the shares for this. Instead of owning shares for this position, I actually have LEAPS instead. As you can see over here, 4 positions of LEAPS. And I'll be selling 2 calls on the 4 position because I do not want to cover all my LEAPS totally. I just want to recover some of the costs if the option is not moving at all, obviously. Okay, as we have done previously, first we're going to look at the expiration date as always. For this, I'm going to go to the 7-day first, and then I'll be looking at some of the strike prices. It don't look too good, so before that, I forgot one more thing. I gotta close my already open position. If I don't close the position, then I will not have any upside potential, as I will have a total of 4 sell calls. So actually, to close the position is actually pretty easy. You just gotta buy back the call. For me, I bought the call back at 0.07. So I paid $7 to buy the call back, but I made a profit of 32, so it was actually fine. Now that we are done with that, we can actually open our last and final position, which is going to be Occidental Petroleum. As I talked in a previous video, Occidental Petroleum is one of my favorite stocks to sell put on. But in this video, I'll be selling a call on it because I already own synthetic positions on this. So for this position, I'll be looking at a 35-day one, and now we'll go on to the strike price. For the strike price, I'll be choosing the $55 strike price, as the premium is pretty decent, and the $52.50 is too close to the price right now, so I don't really want to choose it. So for the premium price, I don't want to think much about it, so I'm just going to put the bid price, which is 81 cents, which equates to $81 in premium. Alright, let's place the order and see does it go through or not. Unfortunately for me, it doesn't go through, so I have to change the price again to even lower than the bid price. So it's about $2 difference, so no big deal. And we are done for the day. So that's all the trade for today. I hope you guys enjoyed the video. Our total profit for today is $535. If you guys like the content, please like and subscribe. Bye bye.